Hey guys, and welcome back to Smart Money Minds. In today's video, I'm going to do a quick review of some of the trades that I made today. My overall account was only plus $70, but there was a lot of good trading lessons to be learned and to be reviewed in the trades that I made today. So starting off, the first trade I made was in PENN, P-E-N-N, and it was a pretty decent sized winner. So the first thing I was looking at here was 28.11, 28.31, and I looked down here and it was hitting that support level during the pre-market range. So let's zoom in here into the 5-minute. So I made a initial entry on the pre-market level, like 1 minute before the opening, at 29.21. So around this range here. And so I was looking at it as an area of confluence, that is an area of support. And as soon as it opened, it dumped a little bit and then it bounced. So what I was looking at also, it is a 1 hour downtrend, which I consider a medium term time frame downtrend. So I was just looking for a short term bounce. So looking at it, it basically exploded in the morning, and I took profits in the first higher low of the 2 minutes. Obviously, I did miss out on some profits on the way up, but you know what? Sometimes you can't complain. Profit is profit. And you see how it faded throughout the whole day here because of the S&P 500 weakness. So that was about $150 in wins. So that's the first big win of the day. The second play I took here was on Amazon. And Amazon, what I saw here was a very clear 2-minute and 5-minute bull flag. That means it's going up, it flattens out a little bit, does a little bit of consolidation, and takes another leg up. And that's exactly what happened. So I took an entry here at 2,623 around just before 10 o'clock here. So I took it here right before the breakout, expecting this move to happen. So if you look on the 5-minute chart, it is very, very clear on this, on this bull flag move here. So I looked for it to move up, and it went up quite significantly. It broke 26.60, which was my target range. However, my mistake here, I would say, even on this winner, was that I took profit too quickly. I saw that it was riding up the 8 EMA, even on the 2 minutes, but I was just too eager to take profit, and so I sold it on the higher low here. But instead, there was way more profits to be gained, and I missed out. But this is where the lesson is don't be too trigger happy. You see the increasing 2-minute bull volume, and we're looking for a full leg up, and my target level was 2660, and by taking my profit at that range, I wouldn't have missed out much. But I took my profits $20 ahead of time. So that's a big lesson to be learned. So the next play here I took was on Oxy, and what we're looking here is the Fibonacci of Golden Pocket, which is 0.618. It was right in this range here. It was 1 hour oversold, so I was looking for a 1 hour oversold bounce. So looking even in depth here, so on the 15-minute, if you looked in just this range here, I was looking at 15-minute bull flag to a higher high, and that was the play I was looking for, similar to the play I made in Amazon. So I made an entry on this lower high, expecting it to continue to break out. However, that did not happen. It rolled over, and then it broke the low of the 15-minute consolidation, and that's where I stopped out. And I took my first loss for about $45 worth, which is a small loss, controllable loss, and that's the losses that you want to be taking. You also see here increasing bear volume, so I was in the right to get out, and SPY was weak, S&P 500 was weak for the rest of the day, and it just gave back altogether. And you have to think about it in the longer term time frame. It was in a let's see here, well, midterm time frame, it is in a downtrend. So that's where we have to be cautious. Until the trend has changed, you want to be cautious when playing counter trend plays. Play that I'm looking at here is on NKLA, which is, once again, I was looking at a bull flag right here. This move up right here, looking for a high. Once again, right up until here, it was looking really good. We had a bit of a descending or equilibrium here, I would say, and I was looking for a pennant for it to break out to higher highs. However, as soon as it gave me that bear break, I was out of the trade, so I entered here at around 66.40, and I stopped out here when 65 broke here on the low, and that was it. That was another $40 loss, and by having that loss, I said I was it. I was done for the day and didn't make any more trades. So overall, the day was up quite a bit, but I gave some back, and you know what? That's the stock market. It's not as predictable as you like it to be, even with the proper patterns and the proper setup. I mean, if you look at Nikola, there was some opposing indicators that indicated that it would consolidate. For example, there was a volume climax here, and it was just consolidating. It had low volume, but it just didn't push up because the S&P 500 gave back pretty much all day. So just ensure that your winners are always bigger than your losers. And the best traders are the ones that are able to limit their losses. And by doing that, that's how you'll be a successful trader. So if you enjoy more of these videos, make sure you hit that like button, subscribe to my channel, and we'll see you guys next time for more stock review videos.